Hello, good morning. It's great to be back at Authenticate, albeit digitally. I must say I'm envious of my friends and colleagues there in Seattle. And I very much look forward to being back with you again very soon, hopefully next year. Nonetheless, it's really exciting to have a front row seat as identity and authentication literally explodes in front of us. And more importantly, as FIDO really comes of age and starts to get to scale. Just judging by the number of conversations internally at Visa, which I think is a leading indicator of what's happening in the industry. You know, a year ago, I did my best to educate my colleagues, talk about FIDO, got some strange looks on what is that. Now it's the exact opposite. 3 or 4 times a week, it's inbound inquiries from account execs, from sales, from product. What are we doing with FIDO? What shared capabilities do we have? How do we incorporate it in our products? It's pretty a rapid and pretty phenomenal shift. In the context of payments, as Andrew said, identity and authentication are rapidly expanding areas in payments and at Visa. So I thought I would first set some context for payment authentication. What is it? Why it is important? How is it changing? So if we go back to the beginning, what do we do at Visa from an authentication perspective? Well, the first thing is we verify credentials. So in the traditional model, you fill out an application for a credit, debit instrument. The KYC is done by your bank. You know, a plastic card was mailed to your physical address. So the fraud surface area was limited since it's mailed to you. And then you do the KYC, you call the bank or now go online and authenticate. So that first part of authentication was done kind of in that narrow context. You know, the rest of the authentication was done in person at a physical store. You know, the inheritance and possession was handled there. And that's how it worked for many years. But changes happened. The form factor certainly changed. Chip and PIN was replaced by magstripe, which drove out a lot of the counterfeit fraud and had the effect of pushing fraudsters online. And this past year, we've seen that digital transformation speed up significantly. Last year, 75% of Visa transactions were digital versus physical. It's a pretty significant and fast transformation. So the implications of digital transactions are effectively every computer can be a point of sale terminal. So whereas before I had that chip in my card and the chip in the terminal, well, now that's not true. So the result is you need digital payment authentication for these digital transactions. And when I say payment authentication, what I mean is the person making the transaction the rightful owner of that payment instrument? And we'll talk a little later about the solutions we have in place to help address that need. So all the while this physical to digital transformation is happening, fraudsters, of course, don't stay still. The fraud's moving upstream from payment authentication upstream to account authentication, what I call payer authentication, or identity verification solutions are needed to take out that broad category of identity fraud, synthetic fraud, account takeover, et cetera. And meanwhile, while this is also happening, the payments business itself is changing. So one example is the emergence of what Visa talks about as its network of network strategies or new payment flows. So VisaNet is not the only payment instrument supported by companies like Visa. Crypto payments, push payments, real-time payments, all these new payment products all need authentication. They all need to be backstopped by identity verification. And they need the ability to seamlessly manage this across a payment supply chain. So traditionally, this has been consumer. A consumer goes to the merchant, then to the acquirer. There could be a gateway and a processor, then to the network, and then the same thing on the other side to the issuer's processing bank and to the issuer and back and forth. So a lot of constituents in these payments flow. And as we add new payment products, you know, the parties are changing, different constituents, new players, all need authentication and identity. So within this context, how does Visa approach this? We approach it in 3 ways. So first, we look at fraud prevention signals. We want to keep the bad guys out of our system. And that happens at many points throughout the life cycle, from application through authentication, all the way through the transaction. Secondly, we're building products and solutions that can directly meet the needs of a digital economy. And that's where FIDO plays a significant role. And third, we're looking for programs that enable communication and provide balance across both sides of our network. across the merchants and across the issuers. So when it comes to authentication, what we want to do is pretty simple. We want you to forget passwords. So we want to get passwords out of our ecosystem. Countless studies have proven that knowledge-based authentication just doesn't work. It's impossible for the consumer to juggle password managers. We just need a better way. And FIDO, we believe, is that way. Our role as a payment network means that, our customers, the banks and merchants, are asking us to provide global standards-based approaches to solving payment and payment-adjacent problems. And that's a perfect fit for where FIDO comes in. So our goal is to help our ecosystem adopt FIDO-based solutions to drive better payment experiences for our customers and better payment outcomes for our merchants and issuers. So I think of this as three things that are interrelated. First, less fraud, more security. Second, more approved transactions. And third, less friction, so better customer experiences. So if we go one level deeper, what we want to do is approve all the good transactions, decline all the bad ones. And we want to do that with the minimal amount of friction. And I won't say no friction here because we've spent a lot of time this past year or so testing the consumer behavior around these payment flows. And what we found is that consumers really want, the right level of friction. They want to feel that they're in control making those payment transactions. And in the context of some of the regulations, this transaction confirmation, this dynamic linking, essentially digitally signing with your FIDO credential is a great way of achieving that. It also means that as payments go digital, we need both authentication and tokenization to ensure that we have security within the network. And on top of that, we need programs that drive the adoption of these security solutions while reinforcing the fraud prevention, all the while taking the friction out of payments. One example of this is the digital authentication framework, which is an effort to drive the performance outcomes to ensure that, if all the constituents go to the trouble to ensure these payment transactions are authenticated, that they actually turn into approved transactions. So what we're seeing is a significant increase in the points of intersection between identity verification and authentication with our payment solutions. I'll call it a couple more examples. First, within our token solution stack, what we're doing there effectively is binding a payment credential to your device. Well, that's a great place for FIDO to come in. Second, we look at new types of payments that are often real-time and irrevocable. Real-time payments, crypto payments. Account takeover in these scenarios can have some pretty significant consequences. And they don't benefit from the chargeback protection that traditional payment networks like VisaNet can afford its constituents. So in these situations, FIDO has a definite role to play to secure these payments and these accounts. So let's take a look at some of the trends that we see in the industry. First, I mentioned this earlier, just the acceleration of digitization. Visa has been on a digitization journey for some time. In the past year or so, we've seen basically a 5 times acceleration of that. And as much as I don't want to talk about the impact of COVID-19, I think it's important to acknowledge that many of our merchants were forced to move online to save their businesses, to try out new shopping models out of necessity. Methods such as curbside pickup and order ahead really transform what were traditional kind of card present transactions into card not present transactions in kind of payment speak. But I think the stat that really wowed me the most was the 65% of global retail is now mobile. That's comes with it a whole new set of problems, but a whole new set of opportunities for mobile authentication and ID&V. And I think it's going to be a huge driver for FIDO. The ubiquity of FIDO within the biometric device platforms really is the accelerant that we've been waiting for with WebAuthn and the native support for, I think last year was 3 billion plus devices, now 4 billion plus devices that can support FIDO. So that's tremendous, but it's not just for the behavior. We also see this translated into sales. So look at these numbers, 32% growth in e-commerce sales in the US, almost 50% in Europe. These are significant trends. And the implication is that things that were important before, payment authentication and IDV, now are really important. Because where there is sales, naturally there is fraud as well. So following on from some of the digitization trends that we've seen, 90% of fraud now happens in the card not present space. And that's naturally where the focus needs to be. In account takeover, we saw just in the US alone, over 6 billion in fraud losses due to account takeover, which for the first time surpassed payment card fraud. So fraudsters want your password more than they want your payment credentials. And if you look deeper into the data, you'll see that email jumped up to near parity with payment credential as the attribute that fraudsters want to target. 80% of hacking related breaches have used either stolen or weak passwords, so the direct cause and effect for account takeover. And the same study showed a huge spike in scams. Nearly 39 million Americans fell victim to these scam attacks. It's not surprising, we're all stuck at home, prey to, on our mobile devices, on our physical devices, prey to these scam attacks. And the origination point for these is often phishing attacks. It's an area where FIDO, as we know, is extremely effective. So that's all the bad news. What about the good news? What are we working on? So EMV 3DS is the standard for payment authentication. It provides that channel for communication between the merchant and the issuer to enable the issuer to validate that the consumer is the rightful owner of the payment instrument being used. EMV 3DS, the latest standard, is seeing global adoption. It's led by Europe, but continues to be a major focus for Visa. Over the past year, we've seen 1.5 billion 3DS transactions. And more importantly, the rails are in place, which may not have been the case in the earlier standard, but now we see 95% support for issuers in the US and Europe. And this is not just for fraud prevention either. The other trend is false declines, which in fact is a much larger problem. The decline rate for card not present transactions is more than 6 times higher than for card present transactions. That means there's something on the order of 440 billion in false declines. And for a merchant and for an issuer, there's nothing worse than declining a good transaction. So what 3DS does is provide that predictability and control for the merchant to drive increased sales via the authentication and data exchange provided between 3DS, between the merchant and the bank. And lastly, from a friction perspective, 1/3 of online purchases are abandoned at checkout because customers can't remember their password. So again, another opportunity for FIDO. It's so much easier to approve a transaction with your biometric than trying to find a password when you're shopping online. Again, that abandoned sale, that lost shopping cart, you lose it from both the merchant and the issuer. So how does FIDO fit into the payment authentication stack? Well, the proving ground for this still is Europe. And just as a quick recap, as part of the strong customer authentication, part of the PSD2 regulation, it came into effect at the end of last year, continues to roll out enforcement across Europe. And this regulation must be applied for all electronic payments, which means you must meet 2 of the 3 authentication standards factors in order to meet the standard of the regulation. And it's the responsibility of the cardholder's issuing bank to ensure compliance. And while there are some exemptions and certain types of payments are out of scope, in essence, if you accept payments in these markets, you have to abide by the regulation. So the building blocks we have in place to support and meet the regulatory standard, first is EMV3, the new 2.3 specification that came out last month, which has dedicated fields for FIDO attestation data to be passed between the relying party and the issuer. And there's a few sessions on the Authenticate conference session that will cover this in more detail. Second, the delegated authentication program. So this is put in place by Visa to ensure that to allow the issuer to delegate the responsibility for that regulation to the merchant, and the goal of not interrupting that payment flow. The FIDO comes in with FIDO solutions implemented by the relying party, by the merchant, to enable that FIDO authentication data to be captured and then passed through 3DS to the issuers to meet the regulation and authenticate the consumer. So the overall goal, less friction, less out-of-band transactions, and more increased authentication and more approvals. So how is it going so far? Well, the news is good thus far. Over the past 6 months, we've seen a 2% increase in approvals in Europe from 3S. And in the US, we're seeing 110 bips in approval increase with a 35 bips decrease in fraud. And as we begin to introduce FIDO solutions, we can expect these rates to continue to improve on both approved transactions and decrease in fraud. So what are the opportunities? Well, certainly in regulated markets, there's a clear need for the strong customer authentication, but that same payment experience that we've been designing and refining for Europe is coming to non-regulated markets as well, because it just works better. As we talked about in the beginning, payments is a complicated landscape with lots of moving pieces and parts. Solutions are formulating around FIDO to connect the pieces with the goal of providing better security and less friction during these digital payment flows. Better experiences, more approvals, less declines, less fraud. So the call to action really is get ready. Understand how your organization's authentication solutions work. Be thinking about how to plug in FIDO into different parts of the payment flows. Talk to your colleagues at conferences like Authenticate and see how the payment experts are incorporating FIDO in the solutions. And meet with your existing solution providers to talk about what are their strategies for adopting FIDO and how they can be incorporated into your existing products and services. And certainly talk to Visa. We'd love to hear from you. Please feel free to shoot me an email or to identity@visa.com, and we'd be more than happy to talk to you and learn more about your experiences. Really appreciate the time to speak with you all today, and I look forward to seeing you again in person very soon. Thank you very much.